Welcome to The Explainer. Today, we are diving into a massive shift, AI's takeover of global finance. Behind the scenes, the big frontier AI labs, they are completely moving on from chatbots. Instead, they're aggressively targeting the absolute bedrock of our society. We're talking about AI literally becoming the new plumbing of the entire global financial system.
Which really begs a massive, kind of terrifying question. What actually happens when AI stops just writing code and starts controlling your money? I mean, this is a seismic shift. The next big wave coming out of labs like OpenAI and Anthropic, it's not about better search engines, and it's definitely not about more fluid conversation. It is all about taking over the core workflows of money itself. These labs, they always telegraph their shots, and right now, their sights are set squarely on the finance industry.
Think about it like this. For the last 12 months, the ultimate AI benchmark was coding, right? Every single lab out there was showing off how well their models could build apps or debug software in a very highly structured environment. But over the next 12 months, the focus is completely shifting to money. We are seeing this massive flood of new benchmarks evaluating how well these AI models can analyze dense financial reports, reconcile complex transactions, and actually plug directly into our financial infrastructure.
And let's look at how this plays out right in our own pockets, on a micro level. So OpenAI just integrated ChatGPT Pro with Plaid. That grants it access to roughly 12,000 financial institutions. Think about that. You can just plug in your banks, your credit cards, your retirement accounts, and suddenly, boom, an AI agent becomes your comprehensive personal CPA. It tracks your portfolio, it analyzes your cash flow, tasks that used to take an accountant hours, like matching up messy transactions or finding specific tax strategies. An AI agent can now do all of that in about 5 minutes. Having all of your financial data organized by an intelligence that actually understands your context, once you have that, you simply won't want to go back to clunky legacy software.
Now, to really understand this shift, we have to look at the underlying infrastructure. Previously, AI developers who were trying to set up a database for these financial agents had to go through what I like to call the legacy database ritual. Okay, so first, you had to provision a Postgres instance, then meticulously set up the connection strings, stash the credentials safely somewhere, and then, step 4, the most important one, pray you didn't leave something running by mistake that would rack up a massive cloud computing bill. It was just a ton of friction, and honestly, it kept AI agents totally leashed and limited.
But contrast that awful old ritual with something like GhostBuild. This is a database designed specifically for AI agents, not humans. It completely inverts the old model. With just one install command, an agent can spin up its own databases, fork 20 different variations of a financial experiment in parallel, and then instantly toss the 19 that failed right in the trash. Plus, there are hard spending caps, so there's no ADHD tax, meaning no surprise bills at the end of the month, literally treating databases as disposable scratch paper. It's a real game changer because it gives AI agents the freedom to move fast and tackle complex financial analysis without any human bottlenecks holding them back. So while OpenAI is targeting personal finance, Anthropic is aggressively moving in on Wall Street. They're entering a $1.5 billion joint venture to get their model Claude integrated into major private equity portfolios with absolute heavyweights like Blackstone and Goldman Sachs. On top of that, they're partnering with FIS to investigate financial crimes, and PwC is actively certifying 30,000 of their employees to diffuse Claude into corporate finance departments worldwide. Anthropic is even sending Palantir-style forward deployment engineers to embed directly inside these massive banks. They are making absolutely sure that AI becomes the new plumbing of enterprise finance.
And why are the banks buying in so heavily? Well, it all comes down to the economics. Just look at recent anti-money laundering benchmarks. AI agents are hitting about 64% accuracy compared to a human compliance officer's 75%. Now I know, 64% might sound a little low at first when we're talking about investigating complex financial crimes, but remember, the AI operates at a tiny fraction of the cost per decision. When AI accuracy ticks up from 64 to 75% over the next year, which it will, it hits parity, and at 85%, it's vastly superior. It's just economically inevitable that AI is going to totally take over these workflows.
All of this brings us to a highly provocative, honestly kind of stunning thought. Why on earth would you use Excel if you have an AI agent? Seriously, think about it. The entire point of Excel is to help humans organize and massage raw data. But if you have an embedded AI agent, it can just instantly write a custom Python script, extract your data, process it in one of those disposable databases we talked about, and give you the exact answer you need. Legacy software relies entirely on humans clicking buttons. In an agent-first financial system, that software becomes obsolete almost overnight.
And believe me, the market is definitely taking notice of this existential threat. Just consider the number 10%. Christopher Hohn, who is the billionaire founder of a $77 billion investment fund, recently dumped his massive holdings in Microsoft. Those shares made up 10% of his incredibly concentrated portfolio. Why would he do that? Because he isn't sure how competitive these legacy tech giants will actually be once AI is fully embedded into places like JP Morgan as the primary infrastructure. If AI becomes the entire Office suite, completely replacing traditional spreadsheets, the old guard could be in some really serious trouble.
But as we map out all this shiny new plumbing, we definitely have to look at the darker side of things, the zero-day exploit. If you're not familiar, this is a previously unknown vulnerability in software that hackers can exploit before anyone even has a chance to patch it. And just recently, Google reported that they barely, and I mean barely, prevented what they called a mass exploitation event. The truly chilling part? It's believed to be the first ever zero-day exploit written entirely by AI. And it was aimed right at bypassing two-factor authentication in popular open-source software.
So, we are currently in the thick of a massive industry-wide cybersecurity meltdown. Vercel just suffered a supply chain hack. AI researchers literally had to drive right to Apple headquarters to warn them of easily hackable vulnerabilities. And OpenAI had to scramble to respond to a major 10-stack NPM attack. If you look at the internal charts tracking software vulnerabilities being found and patched right now, they are basically spiking straight up. As these AI models get smarter and faster at finding flaws, our current digital infrastructure is showing some very severe cracks.
And if AI is truly becoming the plumbing of the financial system, well, those cracks represent a terrifying systemic risk. Industry insiders are actually bracing for what they call the AI liquidity domino effect. Imagine a highly capable, open-source AI unleashing a coordinated attack on multiple financial institutions. The crazy thing is, the attack doesn't even have to be entirely successful. Just the perceived threat of banking access going down can cause widespread panic. People rush to withdraw their cash, and suddenly, bam, you trigger a severe liquidity crunch. That fear alone is literally enough to freeze credit lines and cause a devastating, real-world business slowdown.
Which ultimately brings us right back to the biggest question of all. Who is going to control the world's most important workflows? Because the AI race, it is no longer a cute novelty about who has the cleverest chatbot. No way. It's about whose proprietary model is deeply embedded inside our banks, tracking our personal spending, and actively managing the core capital allocation of our entire global economy. Whichever tech companies become the trusted, secure AI layer for finance are going to hold the ultimate lock-in. So, as these AI agents take the wheel of the global economy, are we really ready for the destination?